What is cash flow investment and capital gain investment? I don't know. Let's go ask Wong.
Properties or stocks? Last 2 weeks ago, I talked about two investment strategies, which are the capital gain investment and the cash flow investment. I hope after you have watched the video, you have already identified which one you should go for. If you have missed the video, you can check it out, the link above. This week, let's review which investment is better, either stocks or properties. Hi, I'm EvaWong, your wealth coach to achieve early retirement. If you wish to learn how to retire early, subscribe to this channel here. I'm a fan of Robert Kiyosaki, and in most of his books, he was talking about property investments. That's why I started off my own investment journey in property investment too. However, after buying a couple of properties, I have bad experience with property. So I started to venture into stocks which require lesser commitment and capital. Both in fact are good investment vehicles, but they have pros and cons. Why property? Property is a high value asset, and what is best is that you can borrow money to buy it. Nowadays in Malaysia, you can purchase a property with deposit less than 3,000 and sometimes zero down payment. In certain circumstances, you get some cash back too. If you're looking for investment that is really low entry price, this is what you can consider. However, there is a threat for property investment. You need to make sure that you have stable monthly income to pay off the loan installment every month. Many agents out there promise that you can rent out your property fast with positive cash flow. But in fact, this is not entirely true. You have to have the knowledge and skill to rent it out fast. Normal investor might not be able to do that easily and fast enough. The property agents don't tell you that the real rental rate could be lower than what you envisage. They don't tell you that you might need to pay high renovation fee to get the house rent out fast. They don't tell you that you need some time to get the unit furnished, and even they don't tell you that there are other hidden costs like the MRTA or the MLTA insurance costs, the legal fees, the stamp duties, maintenance fee, sinking funds, quit rents, assessment, fire insurance, and much more. Once you bought a house with loan, there's no more turning back, so you need to think about your backup plan. If you cannot afford the loan installment and other costs, then never commit to buy one. Choose a property that suits to your budget. In case anything happens, you can still cope with the situation. Hence, if you are earning stable high income every month, which you can afford the loan installment easily, there's no doubt that property investment is a good choice. The capital gain for property is quite good if you are able to keep it for long term. So again, holding power is important. It fetches more stable rentals once the property is completed and you can rent it out. You can get both the capital gain and regular income for a longer term investment. Do not expect immediate return. It requires some time and patience to see good return. When you invest, remember to check out the location of the property. Good location will ensure better investment yield. Once you have invested in a wrong property, it will be a long-term pain. How about stocks? Stocks are best for people who are just starting out and have lesser capital. Stock investment can be a one-off investment, and it does not require long-term commitment. Even one with no stable income, as long as he has some capital to start off, stock investment can be chosen. Stocks are much more liquid than property. When one needs cash, it can be sold easily. Unlike property, it can take 6 to 12 months before the cash can be received. Bad side about stock investing is the stock price is volatile. The price might not be as stable as property. This is something that most normal retail investors cannot accept. When I taught stock investing, I always tell my students to treat buying stock as buying a company. Never speculate. Invest in companies which are great companies that supply good products or services. In that case, there's no more worry about the price volatility. To succeed in stock investing, not only the quality of stocks we are buying is important, the entry price does matter too. For capital gain purpose, we must buy low, sell high. Honestly speaking, this can be quite challenging for retail investors. Most investors will be scared when the prices are down. So investing in stocks requires courage.
I have not enough money. Should I use big deal or small deal? You should use small deal. Why? Because small deal have stock like this one and it's cheap. Oh, I see. Did I have much more money? Where should I go? You should go for big deal. Why? Because big deal have house and can give you cash flow every month. Oh, I see.
Secret tips for investing. If you invest in property, the total investment figure is at least 6 figures. If you invest in stock, you can first start off with 3 to 4 figures to build confidence. Once you are used to the stock price volatility, you no longer feel scary about it. In conclusion, if you have stable income and saving, you can consider buying properties. It will give you bigger amount of gain in the long term in view of the high value purchase. But if you are worried about the long-term commitment, then stock investment shall be the choice. It is more liquid, but it requires just a little bit of courage to withstand the volatility. Assess your financial situation and determine the right investment. One should eventually have both types of investment for diversification and risk management purposes. That's all for my sharing this time, and thank you for watching this video, and I do hope that you like it. Comment below which investment strategy works better for you, and do subscribe for this channel for more early retirement tips, and I hope to see you again. Bye!
Did I have a lot of money? Which one should I go? Go for big deal. Again.